Hey, 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 hey. What's good, YouTube? This is Pursuit of Freedom Project Time Buyback. Looking to buy back my time. Buy it from the daily 9 to 5. The constant grind to never have what you're grinding for. That's just how I look at it. In order to own your time, you gotta own a business. That way you can look the boss in the mirror and ask him, hey, I don't feel like working today. Can I have a day off? Yeah. But anyway, TC2000 is the software. I already told you. This is Pursuit of Freedom. Every day I'm hustling, man. I get off from work and go right back to hustling, man. Right back to work, man. This is the Standard and Poor's, the S&P 500. Now, you can watch the S&P or look at the S&P to see what the overall market is doing on any given day. What I like about the S&P, and I got my total market indexes here, is that I really like to look at the Wilshire 5000, which for a quick second, let's look at the Wilshire 5000. Now, this looks a little weird because each one of these candles right now represents a month. Let's go back to the daily. What I think that I'm spotting, though, is what is known as a head and shoulders pattern. And the reason why I'm looking at the overall market, because I think the entire stock market is looking to be going into a head and shoulders pattern. Now, the thing about head and shoulders patterns is that they typically are followed by a takeover by the bears, a bearish trend, pullback. And once again, I want to click on the market. From the Dow to the NASDAQ, which is 100 companies. This is the top 30. So the top 30 companies right now is, to me, the only thing standing strong, but this is the best performing 30 companies in the US. And the reason why I'm saying that, because my next video is going to be on indicators, specifically moving averages. And I didn't even know what this indicator was that I'm going to mention just briefly. But I'm going to talk about it a little bit more in depth and what it is said to mean, because I'm still learning. You know what I'm saying? I've only been thoroughly digging into this thing for the last 2 years. But I got this purple line, which is my 50 EMA. This orange line, which is my 200 EMA. And if you're looking at that, on the Wilshire, the purple just crossed beneath the orange, meaning that the 50-day moving average, which long-term investors consider a 50-day short term. Day traders look at 9 and the 13, or the 9 EMA or the 20 SMA, but I look at the 9 and the 13 from two of my top gurus that I've studied and still studying. But long-term investors say that when the 50 EMA crosses beneath the 200, they call that the death cross. So that's one sign, one indicator. And I think we also have a head and shoulders forming up, which is another indicator of bearish days to come. Now, I don't 100% fear that, because you can make money by short selling stocks to the downside. Every day you're hustling. You know what I'm saying? Most people don't know or believe that, but you absolutely can make money when the stock is going down. I'm in the practice because I do believe now. My first year, I didn't believe in paper trading, but now I believe in paper trading, because you want to learn what you're doing before you risk your hard-earned capital, your hard-earned money. Now I want to side by side this thing with Yahoo, typed in Head and Shoulders pattern. And of course, looking at the web, that's where it first came up. We talked about, but dandruff is the first thing that popped up. But I guess my computer know me, because Investopia came up with the Head and Shoulders, and then we got some images. But I just clicked on images, and it led me to the Head and Shoulders top. What I like about the Head and Shoulders is that this is a pattern. The overall market, looking at the Wilshire, which I'm finna switch back to the S&P. Standards and Poor's. Go back to the S&P. It looks the same. Any one of them will look the same. The NASDAQ, the Dow, the S&P, the Wilshire 5000. The only thing about that is, once again, I got S&P. The last one was the Wilshire, which represents 5,000 companies and having a death cross. This is 500 companies having a death cross and a Head and Shoulders. The thing about the Head and Shoulders pattern is that it precedes a downward trend in the market. I'm gonna click on another image, the other one that I found, which I like this because it shows you that you can merely flip over the Head and Shoulders and you got the reverse of that trend. This is a great image because it shows you like the massive bull run. I'm gonna switch this over here to the right, it's S&P, to a monthly chart. Now you got years passing by on the bottom. I got the two bottoms from the last two recessions pretty much is when the market is sliding down. When the market is downtrending, you got two bottoms. And over here you got what looks to be that, W shape, or that Head and Shoulders bottom, with a small rally for a second and then another dip off. Now this one didn't quite give you a Head and Shoulders right here for the 2007, 8, 9 recession, which really changed my thoughts of the market. But I was so broke during this time period, I just had to find money. Had to hustle a little bit. I really got into the market right around the time of the bottom of the last recession that we was in before the 2007, 8, 9 recession. But if you look from this 2009, oh my. If you would have bought the market in that time, you could have been looking at the absolute top, 300+% in growth. 300% growth if you had bought the bottom of 2009. Hindsight is 2020. But the thing is that now that I've been thoroughly digging since 2016, about November-ish 2016, since I've been thoroughly digging into this research and knowing what the big hedge fund managers and the people at financial institutions that people take their money to, this is what they do. They study charts, they study fundamentals, and they make money based on these patterns and recognizing these patterns and the fundamentals of, individual companies. But I'm gonna go back to this daily chart of the S&P. Looking at the thought, thinking about a Head and Shoulders. I got a head, I got a peak right here, and I got a left shoulder. But the thing is that it took the market at least a minimum of 5.9, about 6 months, to begin to break above this trend, or at least looking at the top, better than 6 months before I got above the high that was set in early January. And the problem that I see also is that from the high of January of about, what's that high at? 28.73, it only pushed up to 29.36. So the S&P didn't even push up $100 from this 28.70-ish area. It should have pushed up to at least 29.70. Nah, it pushed up to 29.36. And then it started selling off again. You had this massive sell-off in October. I also don't like that November we set a high and then we've dropped, and so far we can't even get back to that high. So the buying momentum is dying and the bearish momentum is increasing. I'm not a soothsayer. I don't predict the future, but these patterns, what they do is they repeat, they repeat, and they repeat. Breakout patterns, they repeat. Breakdown patterns, they repeat. Just like I am, they repeat. You can learn to spot these. See, the thing is, I wish I could have knew that. I wish I would have knew this information what I knew now, but I can't go back in time. And to keep from taking too much time, I'm already at 10 minutes. I'm gonna go ahead on and read side by side this thing and show you that when the market is uptrending, which is what we've been in for the last 10 years, and they say we have a recession every 10 years. I'm not saying we're going into a recession or nothing, but things is beginning to look. The best thing is to now know and protect your capital at all costs. See, if I would have knew what a Head and Shoulders was back in 2007, I would have protected capital. But since I didn't know, I was ignorant to this information, I lost some change. And the same is true. You got an inverse Head and Shoulders pattern to the right, which is when the market is in a downward trend, you get the absolute reverse. Before, they got breakout and trend reversal, breakout and trend reversal. So I think the market might be breaking down. This is what I think. That's not what I know, but I'm gonna keep watching, especially since it took a whole total of like 6 months for us to get ahead. That means to me that it can take probably 6 months for us to get a true right shoulder. Like I think the market might come up and push above these highs, but not quite get back to that high set over here of like 2870. Just looking at the S&P, the market might push up to 2850. Might not even get to 28. Might get to 2837. You know what I mean? It might kind of get above this 28ish area. Who knows? This might already be that right shoulder, but I just, for some reason, I don't feel like that's enough time for me to really say it's a right shoulder. Here's another problem that I see with my thoughts already with the Head and Shoulders is that what I did is I put a symmetrical trend line in here because the lows that was set back in early February, late January was way down at 2536 on the S&P. So I don't like the fact that I'm seeing lower high, but I'm seeing a higher low. So we got some confusion. And if just looking at the symmetrical triangle that I got up here, I want to just make this line thick. Come down here and make this line thick. From the symmetrical triangle that I'm now drawing, you got a false breakout of that symmetrical triangle followed by weakness. Oftentimes with symmetrical triangles, you get a false breakdown, which could, keyword could, be followed by a little bit of strength. I got a strange feeling that we're going to have a breakdown followed by weakness for the whole year of 2019. I don't know nothing, though. This is just an idea. I'm going to watch the trend continuously, though, but I'm going to trade with nervousness, with an extra thought of protecting capital, because I'm not trying to donate to the market. And neither should you if you're just not learning. There is a tuition that every trader, every investor pays. But the key is to limit that tuition. You limit that tuition by learning. This is pursuit of freedom. Oh, another thing that I wanted to point out, though, before I go, is that when I did this video the first couple times, I looked back and I found more information. And I'm going to tell you to type in Head and Shoulders pattern. You ain't got to listen to me. And I'm glad that I found this too, because I recognized this pattern before I spotted these videos, right? And listen to what this CNBC analyst had to say. I'm pretty sure that this fellow went to school for finance and spent $40, $50, $60, $70, $80,000 on his education. But I went to YouTube followed a couple, looked up stock trading, penny stock, any of that information, and you can find the same knowledge that he has for the free 99. That's why I'm putting it out there right now for the free 99. You got to realize I don't get paid for this. It's Pursuit of Freedom over here. I'm just showing you. I'm uploading more videos. But you can just type in Head and Shoulders and find this information. Just say it. Don't worry, I'm already doing the research for you. That's why I'm trying to put some of it out here for that free 99. Uh, but that's what this is looking like to me. A top formation, a rounding top. You can avoid a lot of pain. So education is a must. Hey, this Pursuit of Freedom.